to our guest this morning, Mansoor Dailami, Manager of International Finance at the World Bank. And talking about Indonesia, it was among the emerging markets that were reeling from the Asian financial crisis. Now fundamentals look pretty sound. They seem to be on the right track.
That's correct. I think it's been very encouraging to see some of the Asian countries that were very severely affected by the East Asia crisis in 1997-98. They have weathered this storm much better than even some of us expected. I think it reflects the fact that many governments learned quite a lot from those crises in putting in place a sound macroeconomic framework, moving to much more flexibility in exchange rate, accumulating some degree of reserves that have come very handy during those difficult times.
So if you were to give an assessment of emerging economies, the likes of Malaysia and Philippines, which have put in place their stimulus packages, how successful have they been with their moves?
I think it's fair to say that many of those stimulus packages still have a long way to go in terms of feeding into the economy. I mean, this obviously takes time. Many of those government expenditure, particularly in the area of infrastructure projects, that takes time until those projects can be implemented, and therefore they would have the positive impact on growth. But the good news is that because of the change in the market sentiment for the emerging market as a whole and Asian emerging market in particular, over the past couple of months, we have seen a reversal of capital flows to those countries. We have seen that the exchange rates gaining some strength, which overall has been very positive in terms of providing much more stronger foundation for long-term growth.
So having said that, there's no risk that that plan could fail?
Of course there are. I mean, there's always risk. I think it's, as I said, I mean, the current financial situation in the city is very much a risky one. There are still too many downside risks at the global level. There are still very important issues related to possibility of higher interest rate into the national markets, the kind of risk of protectionism, whether on trade or finance side, are quite important that one has to bear in mind. But I think given all of those downside risks, I would believe that the overall momentum now has shifted from a period that we said trade was taking place in a high anxiety, on the fear, to markets refocusing on the fundamentals. And the fundamentals of emerging market economies continue to be very strong.
Some reports, though, have indicated concern about rising bad debt, given that most of these economies are very export dependent, and and we've seen export slump in a very huge way.
That's correct. I think the export slump that we observed, particularly in the fourth quarter 2008, first quarter 2009, across many countries in the order of 30–40%, these are very important factors to take into account. But to some extent, there is some substitution or source of growth from the external demand to domestic demand. And given the fact that most of the Asian countries have a large amount of trade within among themselves, once China's economy picks up stronger, then I think that would have another positive impact on the Asian countries.
Mansoor, how about corporate defaults?
Corporate defaults?
Yes. Do you see that happening in a big way in Southeast Asian economies?
I think the issue that we are concerned about the corporate sector, again, in many developing countries, and is the fact that the corporate sector has accumulated quite a large amount of foreign currency debt over the past couple of years. Much of those debts were contracted in the medium to short term, and that is coming due for repayment, particularly in 2009 and 2010. There is definitely a bunching of the corporate external debt payment obligation coming due. But
all right, Mansoor, we have to leave it there. We'll pick up the discussion right after this break. You're with The Trade. We'll be right back. This is The Trade, and welcome to our regular currency chat. Every day we'll go in depth on the forex markets with top analysts and traders, and our very own Trish Louie, who will be joining us very shortly. Email us your trading questions. That's tradewithhas@bloomberg.net, or message The Trade on the Bloomberg terminal. And of course, Trish is here. Lots of your emails, Trish. We have a viewer who wants to know about the Sing dollar, whether it's likely to depreciate in the next 3 months because of because Singapore government wants the currency to weaken as part of a strategy to combat the current economic problems.
Well, I think the MAS, or rather the central bank here, has already indicated that no plans to actually weaken the Sing dollar, and there's no deliberate policy of adopting such a stance to weaken the currency for exports rebound. But the market does seem to think that the Sing dollar could continue to weaken, especially against the US dollar anyway, simply because Singapore being a very externally driven economy, they do think that it will take some time for the exports to rebound, and therefore markets still looking at about last checked, I think that there's a 1.48 median to the US dollar by the end of the third quarter. We're about 1.45 now. So your market is still looking for a slightly weaker Sing dollar going into the next few months, even as the global economy rebounds.
Trish, hang tight. Let's talk Forex with Mansoor Dailami of the World Bank. Mansoor, talking about currencies, your colleague said that it will be a very long time before the yuan can be considered a possible global reserve currency. Lots of issues still to be considered. Of course, you share the view.
Well, I mean, I share the view because, number one, that is an issue that depends very much on the Chinese authorities' decision to move forward with a much more convertibility on international markets. For a currency to become today an international reserve currency, it's important, number one, that currency has to be convertible, not only on the current account side, but on the capital account side. And that is one of the important factors. The second one, the important factor, is that that country needs to have a necessarily deep capital markets, development of the necessary derivative market, cross-border, cross-currency, cross-interest rates, to be able to allow transaction on that currency taking place.
So the soonest that the yuan can be a reserve currency would be?
It's difficult to say. I mean, it really depends a lot on the Chinese authorities' decision.
5 years? 10 years?
I honestly don't want to mention any year. I mean, I think with regard to the China, obviously China's, given the size of the economy, given this growth prospects, it's very much on the horizon that it could become an international currency.
Trish?
Mansoor, we're talking about capital flows here. Now, a lot of the Asian currencies has actually appreciated considerably in the last 2 months simply because of a lot of inflows into the stock market. What about as far as FDI flows are concerned? I mean, are these coming back in a strong way so far, given the signs of the green shoots around the world, or is it still very muted at the moment? And is Asian currency still like very vulnerable to all these flows and portfolios?
I think you are correct to mention that the flows have definitely reversed in terms of portfolio equity markets. With regard to the FDI, I mean, we are still very positive for some countries, China and Indonesia, to be able to receive considerable amount of FDI. But FDI, as you know, these are kind of investment which very much depend on the longer-term horizon of the investors. It's not so much depending on the month-to-month fluctuation of the markets. And given the fact that the growth prospects in developing countries, particularly Asian countries, remain strong, we would be very much see that the FDI could return to the Asian countries again, as we had seen in the past.
You know, we've heard how the BRIC nations want to move away from the US dollar and USD denominated trade. Your take on that? Do you see that happening quickly, soon?
I don't believe that's going to happen very soon, because one factor we have to remember, there is a high efficiency of having a single currency that could be used in international trade. I mean, that's there's the economic efficiency argument here, which has to be bear in mind. After that, is very much depend on the country's decision. I mean, dollar still is the dominant currency in the world, both in terms of the reserve currency, in terms of means of payment, international trade, as well as a currency for denomination of various debt issues, both by developing and developed countries.
Mansoor, we'll leave it there for the moment. Mansoor Dailami of the World Bank. We're off for a short break. Well, there's been a run of hedge funds opening to target Asian stocks. We'll pick through who's doing what next. You're with The Trade. Let's get back to our guest this morning, Mansoor Dailami. He's manager of international finance at the World Bank. He's been our guest for the past 30 minutes, based in D.C., but here in Singapore today. Mansoor, let's talk about interest rates. We're in a low interest rate environment. When do you see that changing? I mean, some reports suggesting that perhaps it's the first half of 2010.
I think you're right. I mean, this current very low policy interest rates obviously is unprecedented historically. And we would not see any kind of tangible change in the current environment until we see global economic recovery gain strength. And as of now, our prediction is that this is not going to come before 2010.
What are the risks if Asia continues to have a low-rate environment?
Well, the risk, whether it's Asia and globally, I mean, apart from the current situation that, having a low interest rate is very much desirable to provide the necessary monetary easing, the monetary stimulus for the global economic growth. But if that continues for an extended period of time, the risk is that you're going to have significant amount of speculation building up. You're going to have some degree of high liquidity again in the market. And this is very much the scenario that we had before the crisis. I mean, part of having this crisis and it resulting to a kind of asset bubble was because we had this period of relatively extended low interest rate. Therefore, having low interest rates may be a desirable policy from a short-term point of view, but definitely it's not desirable from a medium or long-term point of view.
That asset bubble you're talking about, it is a real concern. I mean, the Bank of Korea have come out to say that that's a possibility.
Well, there's a possibility, I think, particularly in some developing countries, that you may have, again, significant amount of capital inflow coming to the markets, and that could, again, it created some degree of asset bubble. But I think the asset bubble I'm talking about is not just for one or two countries. I'm referring to the asset bubble during the period, let's say, 2006, 2007, and that really provided the background for the current crisis.
Of course, the other concern is hot money
Right.
causing volatility.
Yeah. Yes.
What's your assessment on that?
I think the hot money is a little bit, one has to look at in perspective. It really affects some countries that the overall macroeconomic environment is not sound enough, and some investors might bet on that. But right now, I don't see the possibility of hot money in many of these markets, because still many of these markets have to recover from the heights that they have, let's say, pre the crisis. I mean, there's still many of markets, although they have gained, let's say, by 34%, but they're still much below than the height of pre-the-crisis levels.
All right, Mansoor, thank you so much for your insights today. Mansoor Dailami of the World Bank joining us for the past 40 minutes.